Good morning, traders. Here's your midweek market snapshot covering the US dollar index, WTI crude oil, spot gold, and Australian dollar. So the US dollar index climbed to a near 1 month high of 99.98 and now hovering around 99.9 and marking its fifth straight day of gains. The move came after the Federal Reserve left interest rate unchanged at 4.25 to 4.5%, but shift its economic outlook to reflect a noticeable slowdown in activity. And notably, two Fed governors dissented in favor of a rate cut, something that we haven't seen since 1993, raising market bets on potential easing later this year. Still, US quarter 2 GDP surprised to the upside at 3% annualized, and the ADP jobs report showed 104,000 new positions in July, adding to the dollar strength. And technically, the index is holding above the key 98 level, with the 50-day SMA at 99.37 offering additional support. RSI remains elevated, pointing to continued bullish momentum, with resistance ahead at the psychological 100 mark and 100.87 beyond that. And now WTI crude oil. The crude oil is holding just above $70 per barrel, which is its highest level in over a month. And geopolitical tensions continue to drive prices higher as President Trump gave Russia a 10-day ultimatum to resolve the Ukraine conflict or face sweeping tariffs on any country trading with Moscow. The market also found relief after the US and EU avoided a broader trade war despite new tariffs. However, downside pressure came from a surprise, a 7.7 million barrel built in US crude inventories. And from a technical view, oil remains above the 200-day MA at 67.71. The RSI is at 62.85, still with room to climb. A break above 69.38 could push WTI toward 71.98, while support lies near 68.69 and 67.71. Now we talk about gold. Gold dropped below 3,300 per ounce, nearing a 1 month low, pressured by the Fed's hawkish hold and a stronger US dollar. While two officials favored a cut, the overall tone was still cautious, pushing the expectations for easing further out. Also, weighing on gold were the upbeat GDP and jobs data, alongside new tariffs on Brazil and India. And technically, gold is showing signs of fading bullish momentum. The MACD histogram remains negative at a negative 8.9, with the RSI at 40.22 and falling. If support at 3250.5 breaks, further downside could follow. And now resistance remains at July's high of 3451.7. And last but not least, the Australian dollar. The Aussie dollar extended its slide, falling to around 0.6448, which is its fourth consecutive day of losses, following the Fed's decision. Although Waller and Bowman dissented in favor of a rate cut, the Fed emphasized ongoing inflation risk and economic uncertainty. This drove a broad US dollar strength and weighing on Australian dollar. And the Australian dollar now trades below the psychological level at 0.65 and the 50-day SMA at 0.6512. And RSI remains weak, below 40. Immediate support sits at 0.6425 and with stronger support at 200-day SMA at 0.6390. And a dovish shift from Fed Chair Powell could offer short-term relief. So that's your wrap for today, and stay alert for Powell's remarks and further trade updates. Until next time, happy trading.